The San Diego real estate market is anticipating an interest rate cut by the end of the year, if not sooner. Here to tell us more is the founder of the Jim Bottrell Real Estate Team, Jim Bottrell himself. Good morning.
Good morning.
Thanks for joining us.
Happy Saturday.
So we've got a lot to talk about today,
Yeah.
but first, we're hearing about the Fed possibly cutting the Fed funds rates by the end of the year. Can you explain how the Fed funds rate influences mortgage interest rates?
Right. So the Fed funds rate is the Federal Reserve Bank, which is the nation's bank. It's headed by Jerome Powell, as chairman of the Fed. So what the Fed funds does, it does not impact consumer credit. What it does is it's the interbank overnight lending rate. So they determine when banks borrow and when they borrow and loan money to each other. If a bank is going to loan money for somebody for a mortgage, if their cost of that money is lower, they can then offer a lower interest rate to the consumer for mortgage, credit cards, cars, etc.
Okay, and a recent article says that JP Chase is expecting as many as 3 interest rate cuts in 2025. So starting in September, does that mean that mortgage interest rates will start to come down in September?
Well, they'll come down. The markets actually lead ahead of time. But you know what's interesting is there was an article that just came out yesterday morning that when JP says there may be 3 cuts, they've actually just changed it and said there's going to be a cut in September and there's going to be a bunch more cuts before the end of the year. Possibly one of those cuts might even be a ½ point. And anytime the Fed moves their interest rates up or down a ½ point, that's them admitting to the world they got it wrong and they're behind and trying to play catch up.
Okay, and what does lower interest rates mean to real estate?
Okay, well, so far not much. You know, we have had interest rates come down. We're at a 10-month low right now, but that's gone from 7 to 6.5, so it's not really that much of an impact. Hasn't changed people's opinions yet. However, when we get to what I call the magic numbers, the low 5%, the high 4%, which I think we will get to, the question is when. I mean, right now, you know, Trump wants rates down. That's a critical function of his one big beautiful bill. Jerome Powell's term is up next May. Whether we get there before May or not, I don't know. I doubt it. But Trump will put in a loyalist who will drop rates dramatically. So once we get to that high 4s, low 5s, that's when the real estate market's going to explode.
And when you say explode, what do you mean by that?
Well, there's 2 halves to it. There's the people who already own homes, which is the majority of the market, upsizing, downsizing, depending on what stage you are in life. If you're younger, you have kids, you get bigger houses, more bedrooms. If you're older, kids move out, you downsize, you don't want stairs anymore. That whole market has been frozen for 4 years because they have not, even though their current house doesn't fit their needs, they're not going to upsize or downsize because that goes from the 2.5% interest rate to the 7% interest rate. Then you have the other half of all the buyers that have been waiting on the sidelines. And every single day I run into a buyer that absolutely has their heels dug in the sand saying, I will not buy a house until I can get real estate or interest rate X. Well, the thing is, that's the same X for everybody. So when that happens, there will be a flood of buyers. And I said the other day, and I'm talking a Noah's Ark level flood of buyers that hit the market. And the buyer's market, the advantage that buyers have right now, will go away.
And so real quick, you don't think that buyers should wait for those interest rates to go down?
No, because we are in a market correction right now. We are in a buyer's market right now. A buyer can go out into the market and actually pick a house that they love right now. A buyer can actually negotiate the price in terms right now. That's a buyer's market. Out of the last 15 years, 180 months, there have only been 13 months that have been a buyer's market where buyers had those advantages. Right now is one of those opportunities. So the play is to buy the house today at today's interest rates. And then when interest rates come down, you know, you want that 4.9%, that's fine. When they come down, remember, all those buyers are going to flood the market. There won't be a buyer's advantage right now like there is right now. It'll be a seller's market. There'll be bidding wars. The price will be much higher. But if you buy the house today, when the prices go up, instead of you paying more for that house, you're gaining equity. And you can still get the 4.9% because all you do is refi into that. And the thing that's a really tough thing to say, but I will say it with a little bit of shock value, there will be realtors that will be available, like myself, next year in June, July, August, that will help you pay a lot more for that same house if you want to wait.
All right.
Because that's what's going to happen.
Good info to have. Thanks for joining us.
Thank you so much.
Jim